Okay, ladies and gents, sorry for the delay, but I guess I'm ready. My name is Robin Cash. I live in Cedar Rapids, and Paul was kind enough to invite me to come and make this presentation today, and I appreciate you all coming. And my intention is to try to inform us about public banking. How many of you all know about public banking? Have heard of it? Okay, well, that's a head start then. This is kind of the outline of what I want to do. I want to tell you how I got interested in it, then I want to talk about what a bank is and about banks and banking and money, and then what's a public bank and some examples of public banking. And then just what some next steps would be. You'll see by what my ambition is, what I think a next step ought to be. So let's see if this is going to work now. There we go. And over the years, I've lived in Cedar Rapids now since 2005, 2006, and I got interested in our city council. And so over the years, I've gone to many, many meetings of the City Council and to several of their committee meetings, and I started noticing that every year they would sell millions of dollars worth of bonds, usually in May or June of each year. And I noticed when I looked more closely that they were paying about as much interest on the bonds as they were for the principal. So I found this just sort of doubled the debt that we had. And then I got to looking at their budget, and I saw that for 1 year they were spending $16 million in interest, which to me is a lot of money. So I was even more concerned when at a certain point our mayor and the council started pressing for a sales tax to pay for street improvements. And they were going to generate from that sales tax about $18 million a year. So I thought to myself, you know, that $16 million would go a long way toward helping our street repairs, would obviate the need for a sales tax, which I think all of us realize is a regressive tax and hits low-income people and poor people hardest of all. I guess we don't need that cleaner alert up there, do we? And then, just in the course of doing some reading, I discovered there might be an alternative to bonding and to sales taxes. So I confess I'm not a banker, nor am I the son of a banker. And I didn't major in finance or banking. I majored in sociology and English, and then eventually in theology. And I was not educated in Iowa, so if there are any shortcomings in the presentation, that may go a long way to accounting for it. I was taught to read and to cipher a little bit in southern schools, mostly southern schools. And I was inspired to start this study of public banking by the debacle of 2008, which I think probably all of us remember. So I started reading a lot of books on economics, things that I could lay my hands on that made sense to me. And one of the books I picked up was a book by a guy named Michael Hudson, Killing the Host. It's about the financialization of our economy. And I was fairly far along in the book when he mentioned that a way to escape financialization, at least for states and municipalities, was through a public bank. This was in a footnote, so I was curious, and so I thought, well, I'll explore that a little bit. So I looked up the Public Banking Institute, which was let's see if I can get that to come up here. I don't know whether I don't have an internet connection, so never mind. At any rate, I commend that website to you. If you just Google Public Banking Institute, you're going to come up on it. And I started reading books by Ellen Brown, who's the woman that founded this institute. In The Web of Debt, she depicts how debt traps not only individuals, but also states and municipalities and governments. And then in the public bank solution, she discusses how public banking can go a long way toward delivering us from that. So what I hope to do is to broadcast my interest enough, maybe others will be interested, and maybe even some city or county officials will be interested enough to conduct a study of public banking and its suitability and appropriateness for their community. I'll get to a little later, the City of Los Angeles has already, their City Council has approved a study that they authorized, and they have on the ballot this November to amend their city charters so as to authorize them to establish a public bank for Los Angeles. The City of Seattle has undertaken a similar study. So you'll probably all, how many of y'all have bank accounts somewhere? All right, everybody has, most everybody has a bank account. We'll get into the people that don't. So it's an institution that can get deposits and make loans. And they can also provide other financial services. And really there are two kinds of banks. There's a commercial bank and then there's an investment bank. And you know, it was the investment banks, when Glass-Steagall was demolished during the Clinton administration, we kind of got mixed up between what commercial and investment were, and that created a lot of problems for us. Most countries, the banks are regulated by a government of some sort. Ours are regulated both by federal authorities, the Fed as we call it, and then we have a banking commission here in Iowa that regulates banks as well. So you can go read more. The Investopedia kind of has a lot of stuff on finance and banking and stuff, and so I commend that website to you. Okay, so how do you get a bank started? Well, you have to get a charter. And to get a charter, you have to have a business plan. What do you want to do with that bank? As you may recognize, for a city, most of the bonding that is done is for infrastructure. And no commercial bank is going to finance your infrastructure, your streets or your bridges or your public buildings. So you have to, so most communities go out and sell bonds to finance those. And then to get your bank started, you have to gather some investors. All of us could invest, $1 million apiece, and we'd probably have enough to get a bank started in Iowa. Different states have different requirements for what your investors have to put up. And then you start receiving deposits and you make loans. You all realize that you get less interest on your deposits than you do for the loans that you have with your bank, and that's the way they make money, that margin in there. So that's here's where you go to charter a bank. That department regulates all banks, state chartered banks in Iowa, as well as other agencies that deal with money. Here's what a commercial bank does. You and I would form the basic capital for our bank, and then we can either keep our reserves. We need to have a certain amount of reserves to cover any deposits that we may fall short on. We either can keep that in our own vault, or we can make a deposit with the Federal Reserve. And then the bank starts getting deposits from you and me, and once we put our money in the bank, it's the bank's money, and what we get is an IOU. And so they do keep track of our accounts, and we always get a little receipt when we make a deposit. So that's kind of what stands for an IOU. And then the reserves are there to cover demands by depositors that may exceed the amount of money that the bank has on hand in deposits at the time. So you all have heard of bank runs, where people get uneasy about the banking situation and they go withdraw their deposits, and it throws a bank into turmoil until they can correct the situation. Mainly they do that by borrowing from other banks. But if there's a huge run all over the country, then you can see that we'd be in a real predicament. So the amount of reserves is set by the Federal Reserve if you're a federally chartered bank. A bank then, as I've said, gets deposits and makes loans. But one of the main things that I learned in the course of my reading that I had not realized is that banks create money. So that interested me. So I wondered, what is money then if they can create it? The money that I'm accustomed to is, of course, the dollar bills and the change that I carry around. And so I learned that money has those three functions. That we have different kinds of money. We used to be on the gold standard. All our money was backed by gold. That is, you could take your dollar bills and you could go to the Treasury and say, give me, $25 worth of gold or $35 worth of gold, and you'd get an ounce. I think that used to be the standard. So what happened during the Vietnam War, when we were spending so much money in Vietnam, we just poured money into Vietnam. The French, who used to occupy and own Vietnam, called French Indochina, I believe, at one time, were collecting all those dollars, and they were bringing them to our treasury and say, give us your gold. And so President Nixon said, enough of that, we're going to run out of gold, and pretty soon we won't be able to honor our obligations. So I'm going to go off the gold standard. He did that in 1971. So now the money that we have is called fiat money. It's money that's created by the government. The Fed will actually create the instruments, and then oddly enough, the government borrows from the Fed and pays them interest. I'm still working on that. And the reason that the money's good, the fiat money is good, is that the government will accept that as taxes or fees or anything else. So there's a big element of trust involved in any money transaction. If I give Paul a check for $500, he trusts that I've got money in the bank and that check will be covered. Or if I make a credit card transaction, the merchant trusts that will be honored. If it's not, we get a reading back all of a sudden, not accepted. So there is a big element of, fundamentally, money involves trust. Maybe you all are acquainted with the biblical notion of you can't serve God and mammon. So to the extent that mammon involves money, then you prioritize your trust in God over your trust in money. And that's a puzzle in itself. So right now, as it stands, about $3, our walking around money is about 3% of what we have. Fiat money is 97% of the money that we have. And most of that is created by the same instrument I'm using to show you this PowerPoint, a computer. And you strike a few computer keys, and the money is made. And the reason you can do that is by the magic of double entry bookkeeping. How many of you all took accounting in college? And all right, so you know about double entry bookkeeping and how that when you make a loan, you also make a mortgage, and they balance out. So that's what happens when we make a home mortgage. The loan officer approves your loan, makes a few little clicks on his computer keyboard, and there shows up in your account, $500,000 so you can afford your McMansion. And also he hands you a mortgage with a payment schedule for you to retire that debt. So on the bank's books, the amount deposited in your account is a debit, I believe, and then the mortgage shows up as a credit. It's an asset of the bank. So, and they all balance out. So, well, they start out that way. They start out that way. And we've heard about foreclosures when people, and that was a big part of the deal in 2008, was that we had a lot of foreclosures because banks issued liar's loans, and which are loans that weren't really checked out before they were made. They just pull you in off the street and say, here, we'll give you 105% on your house, and you can use that other 5% however you want to. But you're going to owe us for the whole 105%. Well, they would do that with people that had no jobs or no income and no prospects of income. So at any rate, a public bank is one that is owned usually by a taxing jurisdiction, though I'm told that, say, a college or university could establish its own bank if it chose to do so. But for our purposes, we want to just think about a public bank being one that's established by a taxing jurisdiction. Iowa City, Johnson County, Cedar Rapids, Lynn County, the state of Iowa. So the one public bank that's been in existence longest is the Bank of North Dakota. And it got started in 1919. The farmers there got tired of the banks in Minneapolis stiffing them on loans, charging them interest that was way too high. It was killing the agricultural economy because people couldn't afford the loans. So they got together, formed this bank. At first it didn't work out too well. The people in North Dakota had these socialistic ideas, and a lot of the powerful people in the state didn't like that. So in 1925 or 26, they reconstituted the bank, and people who were better informed, let's say, about banking took it over and have made it work. But it's worked very well for them. The state and all of its agencies put their income into this state bank. They make it as deposits, so the bank never has any problems getting deposits. They have a steady stream from tax revenue. And the bank it is signed up with the Federal Reserve, but they do not have FDIC. They rely on the full faith and credit of the state of North Dakota to back their money. So that's one of the hang-ups about getting a public bank in Iowa. The law requires a bank to have sign up with FDIC. And I think. Which law is that? Pardon?
Which law requires them to sign up with FDIC?
It's a local banking law, Iowa banking law. Iowa banking does that. And that would make sense to me if we had a lot of depositors and you and I were depositors, but if Iowa City owns the bank and is the only depositor, then they're going to have more money in there than FDIC would require, would be able to cover, or would be willing to cover. So to get a bank started in a public bank started in Iowa, you'd have to get that provision waived for.
What about the insurance that the credit unions have that they belong to a separate thing?
Yeah, they belong to a separate thing. A credit union has its own depositor protection. I think both of them are up, what, $250,000 now? Is that it?
But even there, they're being attacked by the commercial banks for precisely the fact that they're providing a service that the commercial banks would rather provide. So.
Yeah, and so you may have noticed in the newspaper here this last year, there was a lot of contention between the commercial banks, especially the state banks, and credit unions, because credit unions don't pay the same kind of taxes that commercial banks do, and they have maybe some other advantages as well. Okay, so. Here are some things that I pulled off the website of the Public Banking Institute that are good things about a public bank. Keep your money, keep your city, county's money for you. their main focus, a commercial bank's main focus is making money. They may say they're here to serve the public, and in a way they do, but that's a secondary consideration. They're not going to serve the public unless they can make money. So, but a public bank's main aim is to serve the public of the group that owns the bank, which would be in Iowa City would be the citizens of Iowa City, and Johnson County would be the citizens of Johnson County. They do need to make money. Public bank does need to make money. We'll get into that a little bit. A public bank can save Iowa City, Cedar Rapids, Johnson County a lot of money on interest and so on. And also, you're not paying a high salary to your executive, to your bank president. You don't have shareholders that you have to honor, anything like that, that you have to pay dividends to on a regular basis. And then one of the big things is that the money that is used and any interest that you make on it can be reinvested in the community. That $16 million I told you about that Cedar Rapids was paying annually, if they were to buy, go ahead and close out those bonds, buy them up, then they could finance what they were doing through a public bank and use most of that $16 million to invest in public enterprises, infrastructure, economic development, and so on. We'll get into a little bit of that as well. So usually you get somebody who knows something about banking, although one group said we don't go out and look for bankers, we go out and look for people who have some public spiritedness about them, figuring that they can learn how to run a bank. But the main thing is you want some people who have a public interest focus. That there is, because of open meeting and open records laws, then the banks would be transparent and you would know what kind of public decisions were being made. It's the speculators on Wall Street that it got us in so much trouble in 2008. And that was one of my concerns. Why should we be shipping off $16 million a year to people on Wall Street when we could be using that here? We could be circulating that and recycling that right here in Iowa, in Cedar Rapids, for useful purposes. Can create new jobs and help your economy by helping small businesses get the loans they need at a lower rate than they're going to pay in the market. You can the Bank of North Dakota partners with its state banks. That is, the state banks kind of act as a front office for the Bank of North Dakota, and they get to charge their fees and so on for, let's say, making student loans. But the Bank of North Dakota underwrites those loans and does so at an interest rate that's much more favorable than, say, the federal rate, or certainly one that you would get from a commercial bank. So the bankers will oppose a public bank. I don't want to, and being persuasive about being a front office for a public bank will not help them, because they're going to miss out on some interest. And then when you run into hard times, a public bank will be able to withstand that and continue to make loans, because they still have the same tax, they have a stream of tax revenue that they can rely on. And that's, even in hard times, that doesn't go away. I don't know of any city that has exempted me from paying property taxes just because we were in a recession. So some examples. Public banks are widely used and have been for years. They were even used in colonial times. That's the way the colonists financed their war against Great Britain. Created their own money. Continentals, after the war was over, they became worthless. But even before the war, they were financing agriculture and business and so on with public banks. So Germany has lots of large regional banks and several hundred, even thousands of the city-owned banks. India has had public banking since the late 50s. Brazil, two of the largest banks in Brazil are public. Of the 10 largest banks in Brazil are publicly owned, and one of the banks in southern Brazil has hundreds of branches that cover that part of the world for them. And as I mentioned earlier, Los Angeles voters will be voting on whether to change their charter for a public bank on November 6th. Oakland has, their city council has received a study and approved it for a public bank. San Francisco and the state of California are all undertaking studies. The city of Seattle is undertaking a study. In California, it was prompted because the pot growers didn't have any place to go with all of the money that they were drawing in because of the federal restrictions on being able to handle what is considered illicit money, although there's another story about the way the United States has dealt with drug money to help finance its own concerns. So it's
California has, as part of its state constitution, the provision for statewide referenda, public
Yes.
referenda,
Yeah.
does it not?
Yes.
And Iowa does not.
That's right. That's right. So to explicitly to authorize public banks, if you wanted to form legislation, do that, the legislature would have to do it.
Or revise the Iowa Constitution to allow referenda, public referenda.
Yeah. Although, in my discussions with the Iowa banking people, the only drawback that they could tell me about was the FDIC requirement. And as I said, I think you could appeal that and have that waived if a city went forward with a proposal to establish. You're shaking your head, Paul. You're skeptical.
Well, we both know that where there is the will to change that regulation, you can get it changed. And the reason for the will to not change it is that people's backs are getting mutually scratched.
Well, in all my presentations to the City of Rapids Cedar Council about exploring public banking has met with no interest at all. One council person said, well, we were told it wouldn't save us any money, which is a misunderstanding of banking, for one thing, and what banking is about. And so then I was...
They were told that by somebody who had a vested interest, and they're not changing their banking policies.
Yeah, I think that's probably true. So at any rate, to get a public bank started, you need to go through the state of Iowa. The city would have to use some of its unrestricted funds for basic capital and reserves, and then the deposits would come from city revenues from property taxes, fees, fines, other things, franchise taxes, and so on. The city council would appoint a board of directors who would form the policies for the bank, and then would employ one or more persons for a very simple kind of city infrastructure bank. Probably one person could do it. Yes, ma'am.
You know, one of my regrets is not having invested in the Bank of North Dakota. I mean, ordinary citizens there can deposit their money.
Yes, they do.
But now they've restricted it to you have to be a citizen of North Dakota in order to be able to do it. So when you're talking about possibly doing it in Iowa, are you talking about Iowa citizens possibly being able to invest in a public bank, or you're talking about deposits from revenues, property taxes, fees?
That would be the basis for it. That would be the sustaining basis. The policies of the board of directors could be all right, let's let our residents of Iowa City or Cedar Rapids be able to make deposits here and have checking accounts and saving accounts just the way they do at commercial banks. And then that's going to increase the number of employees you'd have to have. But the other thing is that you don't have branch banks or anything like that. So at least the Bank of North Dakota doesn't. They collaborate with commercial banks. Yes, ma'am. Are you?
I guess it depends on where you're located, why the Dakota didn't want, you had to be a resident, because people move from richer states, California, and other places where they can, get cheaper property and everything, and it can distort that North Dakota bank.
Well,
Yeah, and with the oil boom and all those people moving into the state, so they had to make some changes in order to protect their interests as a public bank.
And this reminds me of savings and loan bill before they got ripped off with Keating. This would work. If you follow the savings and loan model, because it almost follows it.
Yeah. Okay, so then you have various banking programs, and I want to give some examples of that. I think that's what's up next. One would be it's an alternative for bonding. And you have basically two kinds of general obligation bonds that are paid off with your taxes, and revenue bonds that are paid off by your water department, from the fees that you pay for water and so on. Here's an example that I drew from Iowa City. Each city is responsible for publishing a certified annual financial report. And so these figures came from Iowa City's 2017 report. Right now they have general obligation bonds totaling about $51.5 million. The interest they paid in 2017 was that much. The interest rate was about that. And let's say if you had a public bank, you could cut that interest about in half, and you would save over $500,000 on those bonds. And surely someone could find some other use for that $500,000 and send it off to New York. Because you would pay the interest to the bank, but then the bank will return part of that interest to the city government. Just the Bank of North Dakota, for example, has returned $30 million a year for the last 10 years to the state of North Dakota. So they support the ongoing operations as well as the banking interests of the state. Banks are intended to make money. You would not get a business plan approved if it didn't foresee making money in some way. And I think they do that by being more efficient, reducing overhead, no high-paid executives, or no need to pay stockholders. Saving money is one thing, but making it is another one. But you have to keep in view that public service is the main thing you're about. The bank has to make enough to stay in business. You have to pay your employee and other things that would go along with the banking. Some examples of programs that a public bank could run include financing affordable housing, helping with student loans, with check cashing, payday lending, affordable housing. I don't know what the situation is here in Iowa City, although the Gazette keeps telling me that there's a real struggle about affordable housing here. We have one in Cedar Rapids as well. And one of the reasons is there's not enough profit in it for developers to undertake it. They want to make more money than that's going to let them. So the usual way of financing affordable housing is with bonding and tax credits. And I think there's been a lot of controversy about tax increment financing Iowa City, and Coralville, I think especially, has had a lot of controversy about it. Cedar Rapids certainly makes liberal use of tax increment financing and also tax relief for tax abatements for developers. Public bank will make loans at less than the bonding rate. You know, interest rates on bonds going up right now. When I looked at bond rating in Cedar Rapids is AA right now. It used to be AAA, but it's AA right now. When I looked at Fidelity's bond interest ratings, they said about 4.7% on bonds now. Well, if you are financing as we are in Cedar Rapids, $200 million worth of flood financing, flood protection financing, then that turns out to be a lot of money, a lot more than 2.32% that we're able to get on when the Fed had interest rates so low. So public bank could make bonding rates that would be lower to underwrite construction for infrastructure, affordable housing, so on. And then there's a lengthy article on Seattle's exploration of public banking at that website. Anybody wants this PowerPoint, I can send it to them.
If you send me that web address, I will relay it to the people on my email list.
Okay. All right, I can do that. Okay, then you all know about students here. Student loans, when I looked it up earlier this week, if you took out a student loan between July 1st and June 30th of next year, then that's the interest you're going to be paying, depending on where you are in school. You know, those loans you keep the same interest rate for the life of the loan. You cannot default on the loan. You cannot declare bankruptcy. You are saddled with that loan until it is paid off. There are no two ways about it. Okay, so if the city of Iowa City were to make student loans, let's say you were to limit them just to graduates of Iowa City high schools who went to the university, and not to all. How many students you have there now? 25, 30,000 at the university. So you don't want to take on the whole thing, but you know, to honor your graduates of high school here, you could give them at lower rates, and I think you could do it in a way that would adjust the rate so that when the Fed lowers its rate, then you lower your interest rate, maybe by keeping it 1% lower than whatever the Fed's rates are, and if they go up, then you go up, like an adjustable rate mortgage. But
you're in trouble when the Fed drops it to zero, though.
But yeah, you would have to say a minimum interest rate and then a maximum interest rate. We have an adjustable rate mortgage on a house that we own, and the maximum rate on that is 10%. So you'd have to have a minimum and a maximum, but you could adjust them so that, and then you could have your local banks be your front offices on making those loans, and the banks would get their fees and so on, maybe be able to collect a customer or two. Okay, so the other issue that I think public banking could help with is banking for people that are financially marginalized. That is, working poor and people who are just outright poor, don't have any jobs or have erratic employment. And I've been reading an interesting book on that called How the Other Half Banks. And the book covers in there a kind of a history of the way people tried to approach banking for the poor. Poor people don't have any banking services, and if you go to my Hy-Vee, you'll see that. People walk in there to get money orders. They walk in to send money through Western Union. They will cash a check for you If it's a check from your employer, but not, and it will give you a certain amount on your personal checks, like 20, maybe it's $50 limit on cash on your personal check beyond your purchase. Yes, ma'am.
Well, I noticed that some people have before here, like what do they call DHS, welfare department? They give them cards now that they have to take to a bank. And it's like even SNAP benefits, the same size of card.
Oh, like a gift card or something like that, or a credit card.
Yeah, they have a card and they go to the bank and they can check whether the money has been put there or not by the state or whoever puts the money there. So they're using the banks for that. And I heard on the news that business report that U.S. Bank bought that payday loan.
Yeah, they're starting their own, and payday lenders that we know about in Cedar Rapids will charge up to 400% on your loan. U.S. Bank is getting into the business. They're going to charge 48% a year, and I think Public Bank could do better than that.
Even with the apparently higher risk involved.
Yeah, you'd have to set your interest rates to take into account defaults and all of the risks that are involved in payday lending. But it would certainly help alleviate a lot of the poverty. Healthcare and lack of bank services are two of the main things that hold people down who are poor and keep them that way. Because these cards that you're talking about, sometimes they will charge you a charge to use the card. They'll, it's not just like it's a free service. You pay part of whatever they deposited in your account to pay for the use of that card.
Can you explain payday lenders? What is, I don't really.
A payday lender is, let's say that I get paid every 2 weeks, and I get paid on Friday of the second week. Well, let's say that at the first of the month, I have my rent, my utilities, my car payment. I run out of money, and I don't have enough money to get, there's too much month at the end of the money. So I have maybe on Wednesday, I have to go get some medicine for my wife or my husband or my kid, and I don't have the money for it. And I don't have a credit card because nobody's going to issue me a credit card. So I go to a payday lender and I get a loan for whatever I need. And so the idea is that I will pay so much interest for that if I pay it back in 30 days. But let's say I can't pay it back in 30 days, or I can't pay back all of it, then I have to refinance the balance that I haven't been able to pay off. And so the interest just keeps piling up and piling up and piling up until I get that paid off.
And what are the service, you're saying U.S. Bank, but what do those places look like? What are they called?
Well, you have
There's one on First
Are
Avenue.
they called cash something?
Yeah.
They're called short-term loans or payday loans. There's one on First Avenue just near Java House. And if you're renting that money for 3 days, you might borrow $50 and pay back $55. Doesn't sound like much, but $5 in over 3 days amounts to an enormous annual fee.
In the military.
So it's like legal loan sharks.
Yeah.
it is a form of loan sharking.
Okay.
Yeah, and
They don't usually break your legs, but they do put you into servitude.
And they can cause you not to be able to get a government job or promotion if you're in the military. Because you're a risk, you can be blackmailed because you're all that money.
And I read that a lot of the payday lenders are financed by the big banks. And so I'm a little puzzled about why U.S. Bank must think it's going to make more money by going directly into the market rather than financing, and maybe with interest rates going up and everything, U.S. Bank is saying, oh, we can make a lot more money because we won't have to give this front office a cut.
And I can guarantee you that the state or federal regulations on short-term loans are substantially more lax than they are with the state of loan that I might take out from the University of Iowa Credit Union. And with that laxity, they can make a lot more money, and they can with that laxity, they can still make a substantial profit even if they've got a 5% default rate.
Right. So the other thing that I wanted to call attention to is protecting public funds from the next crash that we're going to have. You know, in Cedar Rapids, we say it's not whether we're going to get flooded, it's when we're going to get flooded. And although floods are becoming more predictable, they're not entirely predictable, but crashes seem to be fairly predictable. About every 10 years or so, our form of capitalism has a big blow up, like we did in 2008. And people are starting to see signs of another one coming along here. So the next time around, you know, last time we bailed out the banks, trillions of dollars. And they did not lend it out to anybody. They used it for speculation. They were supposed to lend it, and that was supposed to get the economy back on its feet. And so they got trillions of dollars for almost no interest at all. There was zero interest to them. So it was like a giveaway. So at any rate, next time, there's not going to be a bailout. There's going to be a bail-in. And that means that Cedar Rapids, for example, which has, I think, a little over $200 million invested with the U.S. Bank, will have its money declared as equity by U.S. Bank. And so that money that they have with U.S. Bank supports the self-insurance health policies that city employees have. They pay into it, the city pays into it. But when the bail-in comes, the people that were expecting to have insurance will have an equity share in a failed bank. So that means that they will have bought stock with that bank, and the money that was in that account. And the city contracts with U.S. Bank. The U.S. Bank put in the best bid for managing that money. Local banks, it's too much money for them to handle anyway. So I think the biggest bank in Cedar Rapids has deposits of about $11 million. So handling $250 million would be way beyond the capabilities of a local bank. Yes, ma'am.
Do the bail-ins only apply to the U.S. banks, or they don't apply to state banks?
No,
or to credit unions?
It would apply to the, most likely to the big banks. The small banks are probably not going to get hurt as bad because they're not involved in the kind of speculative enterprise that the big 5 or 10 banks are. I think U.S. Bank is the 5th largest bank if you don't count Goldman Sachs and another big financial outfit, another big investment outfit. So about the first 5 or 10 biggest banks would be the ones that did benefit from a bailout.
But
And
cities, municipalities are going to be at major risk in that, and I don't think the American public understands what a bail-in is. You rightly said a little while ago that when you deposit your money in a bank, that becomes the bank's money.
yes,
They give you an IOU, but the bank now has that much more money. And when the bank defaults, that money belongs to the bank's creditors, not to the depositor. This has already happened in Cyprus. It's at risk for happening in several countries in Europe, and it is now legally allowable in the United States. And you rightly point out that the funds that are deposited on behalf of the bank, on behalf of Cedar Rapids, that goes as the either the health care insurance or the retirement insurance of Cedar Rapids employees. They could wind up like the people of, not Exxon,
That outfit in Houston that went,
Enron.
Enron,
yeah.
thank you. Enron, who had a great many IOUs of worthless paper, because Enron was worthless at that point in time. And if Bank of America goes bankrupt, Cedar Rapids ain't gonna get nothing.
No, they won't. They will have probably their deposits from the smaller state banks that they have money in, but the bigger banks are likely to, yes, ma'am.
Well, I find something peculiar about US Bank. They're moving west, Midwest, but they're not going east. But all their people that call you and ask you to get a credit card, and they'll come out of Pennsylvania. That's what I don't understand. Well, you have no banks there going that way. None. But you harass me from there and you go that way.
Well, the calling services are all over the place, and I'll get, if I call in about my computer, I'm apt to talk to somebody in India. So, these calling services, marketing services are all over the place, and they just contract with these big companies to do their marketing for them.
And then too, like, the people that Trump hired, those are some shady people. So the banks are gonna have to have another crash. So.
Well, we had a housing bubble, and the purpose, the fire sector is one of the things, this acronym, finance, insurance, and real estate, are the agencies of the financialization of our economy. And for example, the house I live in an older neighborhood in Cedar Rapids. The house I live in, the last valuation of it by Zillow, which is one of these big real estate marketing and assessment outfits, said your house is now worth $146,000. Well, not a year ago, it was worth $120,000. So over the course of a year, it's gone up that much. So a house is worth what a bank will loan you on it. And banks have an interest in increasing the loan amount that you take out on a house because they make more money. They don't keep the loan themselves, they sell it to Fannie Mae or somebody like that. For example, I financed my house originally with my credit union, but they sold it to Wells Fargo. And so, which is a whole nother story. But at any rate, then as the house value goes up, then my insurance premium goes up. And then eventually the houses in my neighborhood will start appreciating as well. And as they sell, then the assessor says, oh, we do comparative values here, and so everybody's house going up, so my taxes go up. So the business about the inflating housing prices is kind of merciless and relentless. The banks drive that, and the real estate people do too. They say to Paul when he's looking for a house, oh, this is a bargain at $250,000. So although Paul knows he could probably get it for $200,000 if he just haggles long enough. So the real estate people, the bank people, all push to inflate prices. The real estate agent's going to get a bigger commission if he or she sells it. So at any rate, I've used up my time and then some, so I appreciate it. So those are some of the thoughts I have about what,
I would like to point out, Robin, since you already called attention to Michael Hudson, in J is for Junk Economics, he points out that virtually all of the increase in gross domestic product in the United States over the last decade has been in what you rightly call a fire sector, which is massively overinflated. And the original economists, like Adam Smith, when they talk about free trade, they're talking about trade that is independent of the fire sector. The fire sector produces artificial inflation. The insurance is an artificial, rent is unearned income. The income from monopoly investment is basically unearned, because if I make a drug that costs me $5 to produce and I charge $500 for it, $495 of that is basically unearned income. And it is basically unearned income that has driven up America's gross domestic product for easily a decade.
I would, this guy Michael Hudson is associated with the University of Missouri at Kansas City, and that economics department there is, politely called heterodox, but they are very critical of the Friedman Chicago School of Economics, and so I commend Michael Hudson and
Steve King
and Stephanie Kelton, and there are a whole bunch of these folks that I've benefited from reading, and so I would commend them to you. So, and I'm also working on a project to how we can have public ownership of monopolies and benefit cities, our utilities, our cable, our television, internet. So all of these things should be publicly owned. And so thank you very much for coming and for your attention, and
Very interesting.
I'm grateful to you for listening. Thank you.